A new sector leader has emerged, but can the momentum persist for industrials? This is Sectors Up Close, and we're talking about industrials. Industrial companies have climbed to the top of the S&P 500's leaderboard. It's unusual for the group to outperform the broader market, stacked with companies that have steady but slow-growing businesses. It's a bet that waning trade friction will help the US economy rebound after a feeble first quarter. But the risk of recession still looms, so is optimism overpriced in the sector? Adam Phillips is Managing Director of Investments at EP Wealth Advisors. So Adam, US factory activity contracted in July at the fastest pace in 9 months. Is there still room to be bullish on industrials with orders shrinking?
Yeah, we think that there is still room to be bullish. We're actually overweight the sector within our portfolios. There's a few catalysts out there, right? So let's talk about the fact that the dollar has been on a steady decline this year, down about 10%. That serves as a potential tailwind to these companies. We're also seeing broadening out of the market. A lot of this more recently has been driven by the fact that the Fed is now getting ready to cut rates. It looks like at their next meeting in mid-September. And so this has led to a broadening out to leadership outside of technology, which has really been the clear winner here over the last couple of years. So it's nice to see this broadening out. We do expect it to continue and for industrials to be among the beneficiaries. And then finally, there is the One Big Beautiful Bill, this fiscal boost that industrials could benefit from. I'll just highlight the fact that we're finishing up the second quarter earnings season, and over half of the companies in the S&P 500 actually talked about the benefits of the One Big Beautiful Bill, and specifically the excitement around features like the immediate expensing on capital spending. And we think that that could serve as a boost to some industrial companies going forward.
Meanwhile, most large manufacturers have insisted that tariffs won't blow a hole through their bottom line. Won't stockpiling tee up the risk of an inventory hangover?
I think that an inventory hangover is something that we really need to be mindful of. What these companies, I don't envy their position. I think all of us have a really tricky job right now because we're dealing with noisy data and it's lumpy data. We saw a couple months ago, we saw that manufacturing was down sharply. More recently, we've seen a slight pickup and an increase in orders, but it's really just, I think all these companies, wherever they are in the supply chain, trying to navigate this period of uncertainty. And so here, I think when you're investing in industrials or really any company, you need to understand the company, look at the earnings announcements. As I said, we're just finishing up the earnings season.
Public spending on defense, meanwhile, has soared this year. That pushed industry stocks to record highs. Can the rally continue?
It's hard to short the defense industry. I certainly would hope that some piece would apply some pressure to the space. That would certainly be something to get excited about. But it's hard to short this area. Now, we have recently reduced it. Let's just acknowledge the fact that it's up about 30% on the year. Of the 74 industries in the S&P 500, I think it's ranked number 6. But the sector of industrials is quite broad. And so we're actually, if you look at those same 74 industries and rank them on year-to-date performance, another industry within the industrial sector is actually dead last. That's air freight and logistics. And so the industry is very broad. The defense space actually only accounts for about 25% of the actual sector. And so there's other areas that you can invest.
Worries, though, are emerging over the payoffs from vast AI spending. Could this be a risk to industrial companies that have pivoted into the data center market to boost growth?
I think it could. You know what? A lot of us are looking at the AI spending and the fact that it continues to exceed expectations. And the question is how long that'll continue. I think for now we're taking it as a positive that those that are putting so much money towards the data center build out and artificial intelligence in general, they must see some benefit. But at some point, investors are going to expect to see the rewards of this. And so when will the music stop? I think that's the big question. And if and when that happens, it could put pressure on these companies within the industrial sector that are part of that story.
So finally, Adam, Apple is still expanding production in India, despite pressure to bring production back to the US. Is the resurgence of American first trade overblown for industrials?
I think for now, we take it as perhaps these companies trying to stay in the good graces of the Trump administration and really try to maybe just avoid perhaps some of the negative in headlines or social media posts from within the Trump administration. So I think they're trying to play nice. But ultimately, we'll see. I think a lot of the story still is companies are not just looking back at the U.S. in terms of rerouting their supply chains, but just at different countries in general, and really trying to diversify beyond China.
That was Adam Phillips from EP Wealth Advisors. Don't forget, you can watch more videos on Reuters.com.